Hi, my name is Anastasia. Today I will briefly introduce Time.com Berhad. Time.com Berhad is a publicly listed company established in 1995 and headquartered in Shah Alam, Selangor. It plays an important role in Malaysia telecommunication and digital infrastructure development. The company is partly owned by Khazanah Nasional Berhad, which strengthens in financial stability and strategic importance. Time focus on fiber optic network, giving it a competitive advantage in delivering high-speed and reliable internet service. Overall, Time.com Berhad is a strategic enabler of Malaysian digital growth. In addition, Time provided core services such as dedicated internet access, lizard line, MPLS, and SD-WAN. It also offers cloud connectivity, cybersecurity, managed IT service, and disaster recovery solution. In terms of target market, Time focus on urban and high-rise residential user, enterprise customer including SME and multinational companies, as well as wholesale clients such as telecom operator and international service provider. From a market position perspective, Time is one of the largest visit line provider in Malaysia after Telekom Malaysia. Its main strengths include 100% network, premium service quality, and a strong focus on high-value customer in urban and commercial areas supporting Malaysian digital economy. Thank you.
Greetings, Madam Norlina. My name is Nur Ayah Zulaika, and as for my part, I'll be presenting Telekom Malaysia Berhad. Telekom Malaysia Berhad was established in 1987 and is listed on Bursa Malaysia. It is one of Malaysia's leading fixed line and broadband service providers, operating a nationwide network that covers urban, suburban, and rural areas. TM plays an important role in supporting Malaysia's digital connectivity. In terms of services, Telekom Malaysia offers fiber broadband under the Unify brand with Wi-Fi access provided to customer routers. The company also provides fixed line voice services as well as enterprise and wholesale network solutions. Telekom Malaysia serves residential households, SMEs, and large organizations and focus on expanding fiber coverage and strengthening its digital services for future growth.
So next, I will explain the industry overview and the role of financial management for Telekom Malaysia Berhad and Time.com Berhad. So both companies operate in Malaysian fixed lines and fiber-based telecommunication industry. This industry is highly capital intensive because it requires a large investment in network infrastructure and advanced technology. Therefore, financial management play an important role in shaping strategic direction as well as supporting daily operation. It helps ensure long-term sustainability, competitiveness, and value creation for the companies. So the main objective of financial management is the maximization of shareholder wealth. For Telekom Malaysia and Time.com, this is achieved through vast long-term investment in fiber network, infrastructure, and data center connectivity. These investments are expected to improve service quality, strengthen market position, and generate sustainable return. So, in addition, maintaining adequate liquidity is crucial to cover operational costs. Financial management also focuses on risk management, such as controlling interest rate fluctuation, competitive pressure, and rapid technological change that may affect long-term investment. So, moving on to the financial management function. Firstly, investment decisions focus on allocating funds to long-term assets such as fiber network expansion, digital infrastructure, and data center. These investments are essential to support service reliability and future business growth. And secondly, financing decisions determine the most suitable mix of debt and equity to finance this investment. This helps the companies manage capital costs while maximizing financial risk. So thirdly, dividend decisions reflect each company's financial position and strategic priorities. Telekom Malaysia, as more established company, generally emphasize consistent dividend distribution, while Time.com retain more earnings to support future expansion and technological development. And lastly, effective working capital management ensure efficient daily operation and timely settlement of short-term obligation. So overall, strong financial management enables Telekom Malaysia and Time.com to balance growth, risk, and financial stability, We support long-term performance and competitive advantage in Malaysian communication industry. So that's all from me. Thank you.
This slide presents a comparison of financial ratios for Time.com Berhad and Telekom Malaysia Berhad from 2020 to 2024. It's covering liquidity ratio, profitability ratio, leverage ratio, and market ratio. First, liquidity ratios. The liquidity section includes the current ratio, quick ratio, and cash ratio. For Time.com, all three ratios remain above 3 times for current and quick ratio, while the cash ratio fluctuates across the years. For Telekom Malaysia, the current and quick ratio remain close to 1 time, and the cash ratio stays below 1 time throughout the period. These figures show the short-term asset position of both companies over 5 years. Next, profitability ratios. The profitability ratios include cost profit margin, net profit margin, return on asset, and return on equity. Both companies report relatively stable gross profit margins from 2020 to 2024. Net profit margin, return on asset, and return on equity values fluctuate across the years for both companies, with noticeable changes in 2023 and 2024 as shown in the table. Leverage ratios. Leverage ratios shown are debt to equity, debt ratio, and interest coverage. Time.com's debt to equity values remain very low across all years, while its interest coverage ratio vary from year to year. Telekom Malaysia's leverage ratio show higher debt levels and changes in interest coverage from 2020 to 2024. Finally, market ratios. Market ratios include earning per share, price to earning ratio, and dividend yield. Both companies experience year-to-year fluctuations in earning per share and price-to-earning ratios. Dividend yields for both companies also change across the 5-year period as reflected in the data.
Let's start with liquidity. Time.com keeps a high current ratio above 3.0, showing strong financial stability, though some cash sits idle. Telekom Malaysia, by contrast, maintains around 1.10, running lean and keeping capital actively working. In short, Time.com prioritizes safety while Telekom Malaysia focus on efficiency. Looking at profitability, Time.com leads with a gross profit margin of 35% and net profit margin of 20%, plus return on asset of 15% and return on equity of 18%. This shows it turns assets and equity into profit efficiently. Telekom Malaysia is larger but less efficient, with lower margins and returns, making Time.com the higher performing business. In terms of debt, Time.com operates almost debt-free, with minimal debt to equity and interest coverage up to 28 times, very low risk. Telekom Malaysia is more leveraged, with debt to equity often above 1.0 and debt exceeding 70% of capital at times. While Telekom Malaysia can manage it, Time.com clearly prioritizes financial stability. Finally, market ratio show how these companies create shareholder value. Time.com earning per share and price to earning are more volatile, with dividend yield spiking above 12% in 2024, offering growth and special payouts. Telekom Malaysia is steadier, with consistent earning per share growth and dividends around 2% to 4.6%, making it a reliable blue-chip choice. In short, Time.com offers higher potential returns. Telekom Malaysia offers steady, dependable growth. Overall, Time.com focus on high performance, efficiency, and strategic growth, while Telekom Malaysia prioritize stability, nationwide scale, and steady returns. Both are strong, but their approaches reflect very different strategies for creating value.
So for my part, I'll be explaining about the financial management tools and decision making for Time.com Berhad and Telekom Malaysia Berhad. So financial management tools are important especially for telecom companies because they require a large capital investment for infrastructure and digital development. So one key tool used by both companies is financial ratio analysis. So ratio analysis helps management assess liquidity, profitability, and also financial risk. So based on the analysis, Time.com has a stronger liquidity, which shows a more cautious approach in managing short-term obligations. While Telekom Malaysia, on the other hand, uses its working capital more efficiently but needs careful cash flow management. So capital budgeting tools such as net present value and internal rate of return are also used to evaluate long-term investment like fiber networks and data centers. Time.com focuses on selective projects with higher returns, while Telekom Malaysia invests on a larger scale to support nationwide connectivity. So overall, these financial management tools helps both companies make a better final decision based on their different strategies and risk preferences. Thank you.
In conclusion, Time.com Berhad and Telekom Malaysia Berhad adopt financial and business strategies to compete in the Malaysian telecommunication industry. Time.com Berhad focus on high-value market and financial stability, while Telekom Malaysia Berhad priorities national infrastructure and wide market coverage. Overall, effective financial management enable both companies to achieve sustainable growth and support Malaysian digital economy. That's all. Thank you.